Well, hello and welcome to another video by Financial Earning. On today's video, I want to talk to you about a company called CleanSpark. It is a Bitcoin mining company. They just put out PR today with some operational results as well as a few other updates within the last week or so. So without further ado, let's get right into it. All right, let's go ahead and get into today's PR. This is from October 10th, 2024. It says CleanSpark achieves 30 exahashes per second. Now, what exactly is that? Let's go ahead and break down a couple of these definitions for those of you who may not be familiar with Bitcoin mining. We'll go ahead and start with hash rate. That measures the computational power of a blockchain network, group, or individual. The hash rate is determined by how many guesses are generated per second. The overall hash helps determine the mining difficulty of some blockchain networks. So go ahead and if you are still wondering what the heck is an exahash, at the very bottom right of the screen you can see I have that kind of broken out as well. So one exahash is 1 quintillion, that is 10 to the 18th power, hashes per second. So that is a significantly large amount of hash rate speed. And as you can see, it says CleanSpark expects to continue growth to 50 exahashes per second in 2025. So continuing on through today's PR, it says the company's hash rate has surged 200% since October of 2023. So again, 200% within the last year through significant organic growth paired with turnkey acquisitions and execution of a fleet upgrade, improving efficiency during the same period by nearly 20% and boosting the number of operational machines by 112%. So go ahead and break that down a little bit. So not only did they acquire additional locations, mining facilities, but they went ahead and upgraded some of their hardware to get an efficiency boost of about 20%, and they added additional machines to these locations, which again boosted by that 112%. So the efficiency improvement strategy has resulted in increased computing power while consuming less energy and allowing more hash rate to be generated with fewer machines. So this is the kind of information you want to see out of a publicly traded company. They're being, in my opinion, good stewards of that money, that resources, by doing it in this fashion, by trying to increase the efficiency without increasing their footprint. You're going to see a reduced cost of operations. Yes, there may be some power increases as you kind of continue to push the envelope, maybe with some additional hardware upgrades, but there is those efficiencies which do help kind of control how much that power increase actually becomes. And then of course, because you're not having to lease or purchase additional locations, you're able to kind of cut that cost down on cost of operations. So that helps increase revenue while maintaining a very competitive cost of operations. Let's go ahead and continue reading on. The company expects to surpass 37 exahashes per second before the end of 2024 and intends to continue its growth to 50 exahashes per second and beyond in 2025. Where are they going to get that additional exahash rate? That is going to come online due to the expected acquisition of closing of this GRIID Infrastructure Inc. This month in October. CleanSpark is one of the largest owned and operated publicly traded Bitcoin miners in North America, and mentions their portfolio there in Georgia, Mississippi, Wyoming, and Tennessee. I'm going to go ahead and share a little bit more about that geographically diverse portfolio that they have in the upcoming slides. Let's go ahead and get a quote here from Zach Bradford. That's the CleanSpark CEO. He says, reaching 30 exahashes per second positions us as one of the largest Bitcoin miners in the world. We have added more operational hash rate than any other miner in 2024. The results we continue to deliver demonstrate our commitment and ability to scale rapidly and with capital efficiency. So he said it a lot more eloquently than I tried to say. But there you have it from the CEO himself. Let's go ahead and continue reading. It says our team's agility, effectiveness, and relentless grit has been paramount to the success of CleanSpark. Our efforts to time the market and lock in industry best pricing on our rigs and sites position us to take advantage of the opportunities in the market. During this period of rapid expansion of our operations, we've also grown our Bitcoin treasury to over 8,049 Bitcoin. Since October 21, we have significantly increased our computing power year over year by quadrupling. That is right, quadrupling in 2022, nearly doubling in 2023, and tripling our hash rate in 2024. So this is from today's PR. I want to go ahead and share some additional operational information that CleanSpark did provide. This is their September update in this next slide. All right, and this was the September update. This was shared this month in October. This is their unaudited mining update. So let's go ahead and break this down a little bit. Bitcoin mined in September at 493. Calendar year 24, they had a total mined of 5,079. Fiscal year just ended for them. Their fiscal year is October 1st through September 30th. And you can see they mined a total of 7,098 Bitcoin. Total Bitcoin, and this was shared in today's PR as well, as of September 30th was 8,049. They sold a total of 2.5 Bitcoin in the month of September. They have a total deployed fleet, so this would be all their hardware they're using in order to be able to do this mining, at 188,520. Their fleet efficiency is sitting at 21.94, and let me make sure I say this correctly. This is joules per terahash. And then they had their month-end operating hash rate at 27.6 exahash per second. And as we know, they just hit 30 exahash per second this month in October. So exactly how are they continuing to build and grow that exahash per second, as well as mine this additional Bitcoin month over month? And that's going to be the additional acquisitions, as well as that hardware addition in the current locations they have. So you can see during September, CleanSpark did energize an additional 15 megawatts in their Dalton, Georgia location. That was an expansion there. And then their Sandersonville, Georgia location, they energized 50 megawatts. That is their final 50 out of the 150 megawatt expansion they had there in Sandersonville. And then in Tennessee, they just acquired 7 Bitcoin mining facilities in certain sections of land near the Knoxville area for a total of 85 megawatts of Bitcoin mining capacity. And this has to do with that GRIID acquisition that we talked about on that previous slide. And again, this is as of September 30th, 2024. 5 of these sites, which support 65 megawatts, has already closed. The final 2 sites, which are going to add that additional 20 megawatts, are expected to close in the coming days here in October. So again, combined sites totaling 85 megawatts, and then the support of 5 exahash per second. And then going a little bit further, you can see they mentioned they anticipate to complete this acquisition of the GRIID infrastructure by the end of the month. So that's that final 2 site locations they're talking about. And then in Cheyenne, Wyoming, the company closed on a second site there with some preparations under construction underway there for their first data center. So again, they're starting to add some additional hardware that's going to get them closer to their goal in 2025 of that 50 exahash per second. And then you can see Clinton, Mississippi, a company acquired 2 Bitcoin mining sites near Clinton, which are going to be delivered turnkey, and they're expected to be done this coming December 1st. So again, once they are completed, it's going to house some additional S21 miners, S21 Pro miners, again with a combined operating hash rate at 1 exahash per second at that location. So you can see they've been doing quite a bit of movement, but they've also been very efficient with how they're doing that by upgrading their hardware. And if you listen to a founder, he spoke on a space call not too long ago, and they talked about their strategy about how basically they're able to kind of pull some of these miners, this hardware, this mining hardware out of the rack once it kind of reaches its end of life, and they're able to kind of upgrade to some of that latest hardware, which helps them improve that efficiency and helps build upon that exahash rate that they're trying to get to. So just a quick slide here. As CleanSpark mentioned, they are expanding into multiple states. This is helping them become a little bit more geographically diverse. As you know, there was Hurricane Helene that went through and did make its way through Georgia, Tennessee area. So some of these locations could have been at risk for some severe damages. Luckily, they did report that all of their equipment is functioning as properly. They were able to power down to support the grid there. As other areas were starting to lose power, they put the community first in those specific situations. But again, having the capability to expand to different locations around the country is going to help keep them from any type of natural disaster that may occur, or if there's some better competitive rates in different energy sectors within the country, they're going to be able to take advantage of that, and they can either relocate some of their hardware or strategically invest depending on how those different energy rates come out, quarter over quarter, year over year. And I grabbed a couple of snippets from CleanSpark's latest presentation they had. This is an investor presentation. Just a couple of pictures of some of their different facilities. I'm not going to name them all out here, but these facilities represent locations in Georgia. You can see this GRIID. I keep calling it GRIID, GRIID. This acquisition there for Tennessee. You can see Mississippi as well. Don't have anything yet for Wyoming, as that is currently under development. And they do have some co-locations, specifically in the state of New York. But according to some of the PR, at the end of the year, they're going to be branching away from that. I thought this was interesting just to kind of share some pictures just to kind of show you what some of these facilities look like, across these different states. All right, and that about wraps up for me. I hope you enjoyed this video. If you did, please consider giving this video a like. Subscribe to the channel if you haven't already. Leave me a comment. Let me know your thoughts on this video. Let me know your thoughts about CleanSpark. As you may know, the stock price has been a little volatile as of lately, but I do think the company, from a fundamental standpoint, they are investing into the future for this Bitcoin mining. So as the Bitcoin value itself begins to rise, so does the value of what this company is doing. So I think over the next couple of months, it's going to be very interesting to see the value of Bitcoin rise as CleanSpark's exahash rate continues to rise. So again, thank you all for watching. Hope you did enjoy this. I'll be putting out different content, not just on CleanSpark, but on other companies as well, maybe some trading strategies. But I thought with today's PR of CleanSpark, it was definitely worth putting out a video on them. So hope you all have a great rest of your day, and I'll see you on the next one. Well, hello and welcome to another episode by Financial Ernie. On today's episode, we're going to be talking about CleanSpark, the Bitcoin mining company, and one of their latest press releases. This one was dated on October 31st, 2024, and has to do with them acquiring GRIID Infrastructure Inc. officially. So there has been some discussions, there has been some press release information, as well as some filings about the back and forth about this specific acquisition. But as of October 31st, it has officially happened, folks. So without further ado, let's get right into it. All right, folks, I want to go ahead and talk to you about that press release. Again, this is dated October 31st, 2024, and this is between CleanSpark Inc. and GRIID Infrastructure. Now, the reason this finally was able to be announced is because the GRIID Infrastructure shareholders actually put this to a vote, and it was approved on October 28th. So following that vote, they were able to finally formalize this acquisition and this merger. I say merger because the GRIID Infrastructure was already a traded company, and their shares are being converted over to CleanSpark shares, as well as some of their warrants. I'll go ahead and flash up some of that SEC filing on some slides as we continue forward. But before we do that, I want to talk a little bit about this specific acquisition. So as you can see here, this was for 400 megawatts. They were already being hosted by GRIID for 50 megawatts. So they're already going to be getting a significant boost in terms of mining capacity and mining capabilities there in Tennessee. So I am very much excited to see what this means for the quantity of Bitcoin that CleanSpark is going to be able to mine per day, as well as what their new hash rate will end up being. So that information, I'm assuming, will get disclosed in the near future. I'll also be sharing a video about some hardware purchase that CleanSpark has done just this past weekend. It was announced on Friday. But before I move on, I just want to go ahead and read a quote by CleanSpark Inc.'s CEO. This is Zach Bradford. He says, "I'm pleased to announce the completion of our acquisition of GRIID Infrastructure Inc., a strategic move that allows us to grow our Bitcoin mining capacity in the state of Tennessee, which we intend to build over 400 megawatts in the coming years." So again, I already mentioned that, but just wanted to quote the CEO there. That is huge, folks. I'm very much excited. This does allow CleanSpark to continue to expand. As you all know, when it comes to mining Bitcoin, it does become more and more difficult the more blocks that are mined. So you have to continue to look for ways to grow, ways to convert some of your hardware over to the latest and greatest to make it more efficient. And you have to have a good relation with some of the power generation companies. You've got to get some strategic partnerships or get some strategic contracts written to where you're able to reduce the cost for that Bitcoin mining power. So that in itself is a huge, huge feat. I'll talk a little bit about that on a different video, but just wanted to bring that relevance here when it comes to CleanSpark. As I mentioned, GRIID Infrastructure is a publicly traded company, or was. Now those shares are being converted over to CleanSpark shares, and they do talk a little bit about that conversion ratio. So for every GRIID share, the GRIID shareholders will be getting a conversion to 0.069559, a share of CleanSpark. So that is important because if you want to understand how many total additional shares will be getting added to CleanSpark, you'll need to look at what GRIID Infrastructure's common share count was, and then what this conversion rate will be. And again, these shares will just be getting added to the current float. There will be no sale or purchase when it comes to this. They're just going to be getting added. So the float will grow. Another thing that you do need to be cautious about when you are looking over these filings, make sure you fully understand the inner workings of them, because there are some warrants that have not been exercised from GRIID Infrastructure investors. Those warrants are also going to be getting converted over to CleanSpark warrants, and they talk a little bit about that in detail in those SEC filings. So make sure you're reading those as well, folks. Make sure you get a good understanding of what investors were previously invested with GRIID Infrastructure, because those same people are now going to be part of the CleanSpark investment group. So it's going to be important to understand, are they long-term value type investors who want the company to continue to grow and succeed and see their investment continue to grow? Or are they looking for some of these more technical type trades where they're betting on the opposite of that? So it's going to be really important you understand these investors. All right, and here is one of those SEC filings that I was talking about. You can find this on the sec.gov. I'm not going to go over it in detail. This is more about the press release, but I just want to share just a couple of these details with you all. You can actually see exactly how many warrants of common stock are going to be getting converted due to this merger. So GRIID had an outstanding unexercised warrant quantity of 13,800,000 shares of common stock with an exercise price of $11.50. So remember that ratio I talked about. You need to take that ratio. You're going to multiply that ratio or divide that ratio against 1150, and you're going to get a new dollar amount per share for CleanSpark, and that is going to be the new exercise price for these warrants, and that is going to be $165.24 per share. So that is a very large price amount, considering right now CleanSpark is trading somewhere between $10 and $11 depending on when you're watching this video. So just want to kind of point that out as well. And then it talks about how many total shares will those warrants be converted to, and it is 960,395. So those will be additional shares that will be added to CleanSpark in the form of dilution if these warrants are converted. Now, the company will have an opportunity to purchase those warrants instead of having them converted. It's really up to them and their strategy. I will be interested to see if they touch on that at all in the days or weeks to come. Another portion from this filing, I just want to kind of read this little section here. It says, if the foregoing conditions are satisfied and the company issues a notice of redemption of the company public warrants, each company public warrant holder will be entitled to exercise his, her, or its company public warrant prior to the scheduled redemption date. However, the price of the shares of common stock may fall below $18 redemption trigger price, as well as the $165.24 company public warrant exercise price after the redemption notice is issued. All right, and that wraps it up for me, folks. I hope you all enjoyed this video. If you did, please consider giving it a like, subscribe to the channel if you haven't already, drop a comment. Let me know your thoughts about this. Let me know what other types of content you'd like to hear me cover. And with all that said, hope you guys all enjoyed it, and I'll see you on the next one. Well, hello and welcome to another video by Financial Earning. On today's video, we're going to be talking about a different company than I typically cover. However, they are involved with a specific Bitcoin mining company that you may have heard me speak on in the past, and that is CleanSpark Inc. So without further ado, let's get right into it. So this is from November 1st, 2024, this PR, and this company is mentioned from Singapore. It says, Canaan Inc. awarded order from new customer CleanSpark for Avalon A1566I miners. So let's break down this PR a little bit more. There is some important details, and then we're actually gonna look at some of the specifics on this specific miner piece of hardware. So according to purchase agreement, Canaan US Inc. will provide CleanSpark with 3,800 Avalon A1566I immersion cooling miners. The miners, with average compute power of 249 terahash per second without overclocking, are scheduled to be delivered in the fourth quarter of 2024. So this PR comes right off the heels of the GRIID infrastructure acquisition. So as I mentioned in previous videos, it does appear that CleanSpark is starting to scale up and utilize that existing power capacity. As you may recall, it was 400 megawatts there. And this is something that Bitcoin mining companies do from time to time. You always want to be upgrading your mining hardware because that keeps it at the highest efficiency as possible. That's going to help out from your cost of operations compared to that revenue generated by that mined Bitcoin. So again, this is something that is done from time to time. However, I am very much interested to understand the strategy behind how they're going to integrate all of these additional miners into their current setup. Are they all going to be designated at that Tennessee location, there at the GRIID infrastructure location, or are they going to be used throughout their different mining footprint sites? Well, I guess we'll just have to wait and see once CleanSpark announces just how they plan to use these specific miners. But while we wait, let's go ahead and look a little bit closer on these specific miners and see if we can figure out ballpark what kind of cost did this 3,800 Bitcoin miners actually cost CleanSpark. So as you can see on the Canaan website, you can see the Avalon A15 series. It's a new generation of Avalon miners. So this is the latest and greatest in Bitcoin miners for this specific company. And this is the first time CleanSpark has purchased from Canaan specifically. So on this specific slide, you can actually understand exactly what this Avalon miner looks like. So it's actually not that large of a piece of equipment. So it's crazy that something like this costs $4,000 and that CleanSpark is going to be purchasing 3,800 of them. Again, you can look over some of these specs. We're going to actually look at some more of the details in the future slides. I did see on their site that there is an option for bulk ordering. So I would assume that CleanSpark would be getting some form of a wholesale purchase when you're talking about this many pieces of mining hardware. However, just looking at it from a retail standpoint, it's $4,033.80 per miner. All right, so if you were to take the price of this Canaan miner at $4,033.80, and again, this is retail price, multiply that by 3,800. That was what was in that press release, and you're looking at $15.3 million. Again, that's retail price. I believe they will be getting that bulk order discount, so it should be less than 15 million. Where exactly it is, we're not going to know unless they go ahead and put out a separate press release to kind of let us know more about that information. What's interesting about this company is that they let you purchase this with cash or Bitcoin. So I don't know, I just think that's interesting that these Bitcoin mining hardware companies are actually letting these miners purchase it using Bitcoin as well. All right, and looking at this slide here, you can see some of the specifics for this Bitcoin miner. Again, they talk about hash rate, power consumption, efficiency, and a few others. So let's go ahead and dig in together. Hash rate is at 249 terahashes per second. That was announced in the press release, but I want to go ahead and show it again. This is the correct miner. And power consumption at 4,500 watts, so 4.5 kilowatts, and this is a plus or minus 10%. Power efficiency, we're at 19 joules per terahash. So it gives you an idea about how efficient this miner is. And then it goes into some more information as far as the input voltage and some of the other dimensions. So if you are looking to set this thing up, you're going to want to understand how you can get it on the racks and what it would look like once it's fully integrated. All right, and that wraps it up for me, folks. I hope you enjoyed this video. If you did, please consider giving it a like. Subscribe to the channel if you haven't already. Drop a comment. Let me know your thoughts about this press release involved with this Bitcoin miner and this Bitcoin mining vendor. And with all that said, I hope you all have a great rest of the day, and I'll see you on the next one. Well, hello and welcome to another video by Financial Learning. On today's video, I'd like to talk about CleanSpark, the Bitcoin mining company. They just announced their earnings report coming out after the closing bell on December 2nd. That's this Monday at 4 p.m. and their earnings call is scheduled for 4:30 p.m. So I'd like to go ahead and jump into some of their latest news and let's discuss how their latest operating metrics look. All right, first thing I want to talk about is the amount of Bitcoin they mined in the month of November. Now, this is unaudited. This is what I have found online based off of their wallet address that has been shared by other investors. You can find this information on bitinfocharts.com. But according to my calculations, they mined a total of 622.25 Bitcoin in the month of November, and they had their highest single day at 21.61 Bitcoin. All right, and based off of November 4th's press release when they announced their October mining data, they shared their total exahash at 31.3, but I'd like to talk about what type of potential changes happen in the month of November. So let's go ahead and continue on. So if you're familiar with some of the investor presentations, you would know that CleanSpark had a co-location for a total of 100 megawatts. That was for New York as well as the GRIID infrastructure location there in Tennessee. So at the end of October, they did announce that they did close on that GRIID acquisition. So that 50 megawatts will change from co-location to being fully owned and part of CleanSpark's infrastructure. Now, they still have the same amount of exahash that they were getting for those 50 megawatts from GRIID. But if you do look at the PR, they did mention that they plan on a total of 400 megawatts at that GRIID location. So that is a very positive thing to look forward to as we finish up the calendar year 24. So besides the GRIID infrastructure acquisition, CleanSpark also talked about 2 locations in Clinton, Mississippi. That is going to provide them with additional 1 exahash rate, and those locations are actually supposed to become operational at the beginning of December. So with this earnings call set for December 2nd, I think that would be rather bullish information for the CleanSpark management team to share with the investors. So I'm looking forward to seeing what type of forward forecast guidance we may get, as well as some of these operational updates. All right, and if you recall on their latest investor presentation, they did share their roadmap or their path to 50 plus exahash per second, and they shared their calendar year 24 plan to be 32 plus exahash. If you recall on their latest mining report on November 4th, they were already at 31.3, so they are very much on target to finish the year above 32 exahash per second. And let's talk a little bit about those additional miners that they're supposed to have come online in fiscal year 25. So their path to 50 plus exahash breakdown, you can see here, you're going to see some of these locations that are already online, but they're going to be doing some significant hardware updates, some significant overhaul in order to get some more efficient miners at those specific locations. Remember, just because they have a specific amount of megawatts doesn't mean they're going to be most efficient. They have to make sure they're staying up to date with the latest and greatest in terms of those miners. So looking down at the bottom of the list here, you can see two very large batches of miners that they have planned to come online in fiscal year 25. The first is that S21 Pro, and then the second is the S21 XPIMM. We're going to go over both of those two. I was able to find some PRs for both of those that were shared from these specific vendors. So let's go ahead and jump right into that. All right, starting with this first mining purchase order, this is for bitmain, and this is for a total of 160 million. They put out this PR in September. They actually signed this purchase agreement in the month of August, but it is very, very large. It's about 26,000 of these miners, with the first batch of 13,000 to be delivered in Q4. So again, CleanSpark's been sharing about how they plan on scaling up in order to hit that 50 plus exahash rate. All right, and I already had this on a separate video, but just wanted to share this as well. This is that other purchase order that the company Canaan Inc. has provided their investors that CleanSpark has made. And this press release was actually on November 1st. And this was for a total of 3,800 of these Avalon A1566I miners. So again, CleanSpark continues to show how they are potentially scaling up in fiscal year 25 to be able to hit that 50 plus exahash rate. I say potentially because I wanted to go ahead and talk about this news article that came out, and this has to do with the U.S. Customs Border Patrol. The U.S. Customs Border Patrol recently reported that these bitmain miners have been detained at the border. I'm not sure if these are CleanSpark's actually earmarked orders or not, but this is something that is impacting quite a bit of these Bitcoin miners, and that is the sanctions that could potentially come about on some of these miners. And that is because of some of the chips that are made in the country of China. If you want to read through, I'll drop a link to this specific article in the description, but just wanted to kind of bring it to your attention. So as CleanSpark is attempting to scale up to that 50 plus exahash, they are going to have to be able to get these miners delivered to where they can get them energized and be able to see more efficient mining at their facilities. All right, and that wraps it up for me. I hope you enjoyed this update about CleanSpark, some of their activities. I'm very much looking forward to hearing their earnings call by the management team after the bell rings on December 2nd, as well as looking through their full fiscal year 24 financial records. I'm also looking forward to their calendar year 24 coming to a close, maybe getting an update about how some of these other site locations are doing in terms of operations. How are they going to finish the year on their exahash rate? Are they going to hit their 32 plus target as they have there? And then I'm very much excited to see how they bring in the calendar year 25, especially with the price of Bitcoin where it's at right now. I think they are going to be one of the top, if not the top, mining company in calendar year 25. And this is just based off of this very aggressive exahash rate path that they have laid out before us all. Hope you really enjoyed this video. If you did, consider giving it a like, subscribe to the channel if you haven't already. Drop a comment, let me know your thoughts about CleanSpark, or let me know about what other types of content you'd like to hear me cover. And with all that being said, hope you all enjoyed this video, and I'll see you on the next one. Well, hello and welcome to another video by Financial Learning. On today's video, I'd like to break down CleanSpark's latest earnings report. This is their annual 10K. So without further ado, let's get right into it. So the first thing I'd like to share is actually on the heels of that 10K, and that is their mining report. I'm actually going to go back to the September ending mining report because this should actually correlate exactly with the 10K. So just briefly, let's look at these highlighted numbers. So back at the end of September, they had a total Bitcoin mined for fiscal year 24 at 7,098, and they had a total Bitcoin holdings at 8,049. They had a deployed fleet of 188,520, and they had their exahash rate back then. Again, this is at September 30th at 27.6 exahash. All right, and jumping into the 10K itself, I want to go ahead and take a look at some of these other highlighted numbers. These should correlate with that mining result. And as you can see here, this is as of September 30th, 2024. They had a total mining fleet of 188,500. They had approximately 27.6 exahash per second, and they had a fleet-wide efficiency at 21.94 joules per terahash. Again, and they also talked about their mining numbers coming in at 7,092. All right, this next slide is actually just a snapshot of their different mining locations. Just wanted to bring it to everyone's attention. They do have mining facilities or mining sites in the states of Georgia, Mississippi, New York, and Tennessee. Some of those are co-locations. That would be Tennessee as of the end of the fiscal year there in September 30th, and also in the state of New York. And as some of you may know, based on their press release, at the end of December, they're actually going to end that co-location service with New York. That is their only hosting service because they did acquire the GRIID infrastructure. So as of January 1st, 2025, they're going to be 100% owners of their entire fleet. So that's important because that allows them to control not only the operations there, but also they're able to negotiate on their power rates. So they have full control over the operational excellence of their entire fleet. And looking at those different states, if you want to, you can go ahead and pause here. I'm just going to run through the numbers. You can see in the state of Georgia, they have 12 sites with 483 megawatts with an exahash rate at 20.6. That is by far their largest section there. Next is the state of Mississippi with 4 sites. 44 megawatts with just 2 exahash per second. New York, this is that co-location there with 1 exahash. 1.5 exahash, just at one mining location and 50 megawatts. And then last is the Tennessee location, currently has 79 megawatts, giving a total of 3.5 exahash and a total of 8 mining locations. Again, that is where part of that GRIID infrastructure. All right, and this is actually a very interesting slide. This actually states the total number of miners they own versus the amount that are deployed. That means they actually have some capability to increase their exahash rate, improve their efficiencies with some of these latest miners. So let's jump right into this. So it says they own approximately 235,000 miners as of September 30th, which of those 189,000 were in service. And the remainder is new machines ready to install. So again, they talk a lot about that megawatt infrastructure that they have. They have plenty of room to keep growing. They do like to use that green construction or that green infrastructure. That's basically that organic growth where instead of buying a facility that already has the different servers and the different infrastructure set up, they go ahead and purchase land in rural areas where they can get a very good rate on that megawatts or those kilowatts that they would pay monthly for those Bitcoin to be mined, and they're able to negotiate best rates, and then they're going to acquire the sites. They're going to build out their locations. Zach did say on a call recently that they're able to get those locations built and actually running within 6 months. This is a lot different than some of the other miners who are going more towards this this AI and this data center approach. A lot of those facilities take 3 to 4 years just to ramp up, and that is at the point of time where you can start to generate an ROI. And by that point in time, as Zach did mention, a lot of these facilities are already going to be making significant improvements. So it's going to be very difficult to have strong margins at that point in time as this specific industry, this data center industry, continues to grow. Moving along a little bit further down here, another couple things I wanted to point out is the miners range. So they range in age of 1 to 45 months. So it's basically how long they have on their depreciation cycle before they get retired, and then those new miners are put in place. Their average age is about 12 months. So again, depending on the type of miner it is and the efficiency they're getting. And Zach also talked about the fact that it depends on the infrastructure where those miners are located. If they happen to be in an area that is still giving a very generous power rate, then even if the efficiency is a little bit lower, the cost to mine that Bitcoin may still make sense for some of those earlier age models. And then as we continue through the rest of this, I wanted to point out that it's also mentioned here that they will utilize their Bitcoin as collateral for lending agreements. Zach again mentioned a little bit about this on that fireside chat. As their Bitcoin holdings, their HODL gets closer to that 10,000 range. And as you may see, Bitcoin has just passed the $100,000 mark per Bitcoin. So we're definitely still seeing a price appreciation for Bitcoin itself. But as they get closer to that 10,000 Bitcoin HODL, they're going to be at about $1 billion is going to be the value for their Bitcoin based on today's pricing. So with that, there is a lot of leverage that CleanSpark can do in order to be able to get some yield off of that Bitcoin. And he talked a little bit about different strategies. They're going to go with the crawl, walk, run phase. So they're not going to jump in too far as their entire business is structured around efficiency and operational excellence. They're going to make sure that they succeed at how they're able to leverage their Bitcoin HODL. And a couple other things, again, as was mentioned on that mining report, you can see here near the bottom of this slide, it says that on September 30th, they held approximately 6,819 with a receivable for a 1,229 Bitcoin. So basically they were leveraging some of their Bitcoin to help them make some purchases. So they still have that as well as a receivable. They do expect to have that back in their possession. All right, and on this slide, I think this is actually a very interesting slide. I want to take just a brief moment to kind of talk a little bit about this. They actually share the global mining hash rate. So all of the miners, private, publicly traded miners, all of them combined. There's a this is of course an approximation as these numbers are changing, day by day. But there's a total of 627 exahash per second. That is the total amount of hash rate for all the miners combined globally. If you look at CleanSpark as a company, again, this is as of September 30th, they were sitting at 27.6. So that means their market share is sitting at 4.4%. You can see how their market share has grown year over year. And it's important to remember that the halving did take place this fiscal year. So you may see some lower Bitcoin mining numbers as they continue to increase their efficiency. It's very, very smart the way they're doing it. They are scaling up. They are investing into their optimized miners, their more efficient miners, so that they're still able to have an aggressive and profitable profit margin on their Bitcoin mined. All right, speaking of revenue and profit margins, let's take a look at this slide here. Again, this is as of September 30th. You're going to see at that point in time, the average revenue per Bitcoin was $53,708. As of today, it's already breached that $100,000 mark. So within just less than a quarter, less than 3 month time period, we've already seen almost a double in Bitcoin price. And you can see there, CleanSpark is able to efficiently mine their Bitcoin at a total cost of Bitcoin mine at $39,936. That is their average. So if you take all their sites together where they're mining their Bitcoin, that is the average cost to generate one Bitcoin. So if you look down at the direct cost to mine each Bitcoin as the percent of Bitcoin mined revenue, this is going to give you the percent or the cost to mine that Bitcoin. So as of September 30th, it was costing CleanSpark about 74.4%. So they were making about 25% profit margin per Bitcoin mined. Of course, at today's rates, they're making a nice, healthy 65% profit margin. So it is looking much, much better for miners as the price of Bitcoin continues to increase. And as Zach also talked about on that fireside chat, they are still able to negotiate power rates. So the plan and the forecast does look like they will be able to continue to negotiate and get better and better rates in these rural areas as they work with these different power generation companies. All right, and as I mentioned, they did still, at the time of this earnings report, have some of these co-locations, and they still have the New York one until the end of this calendar year. But they talk a little bit about what type of profit margins they're seeing at these co-locations. And you can actually see that at these co-locations, the ones that they actually have hosting at. So they basically use their miners and they have to plug them into this other company in New York's infrastructure, and they are subject to those specific power rates. You can see that the cost to mine the Bitcoin at that location as of September 30th was 115%. So they were actually mining at about a 15% loss as of the end of September. Of course, with today's price of Bitcoin, it's actually still profitable at that co-location. They will be ending that co-location agreement in New York at the end of the calendar year. But as you remember from that table, that is a very small amount of exahash per second that they will be taking away from their overall portfolio, but they will be plugging in additional miners. As you recall, they still had a healthy about 46,000 miners available to plug into their already existing megawatt infrastructure they have at all those other site locations. So I don't think that's going to be an issue, and it does look like CleanSpark has already been kind of planning on how they're going to close that gap by the end of the calendar year. All right, and continuing on, we're going to look over the Bitcoin mining revenue. You can see their revenue increased by 125%, looking at fiscal year 23 compared to fiscal year 24. And they talk a little bit about, obviously, what contributed to that revenue will be those miners. So if you look at the end of fiscal year 24, they had approximately 188,500 miners compared to a previous year of only 88,000. So a very hefty increase in miners. A little over 100,000 miners were added to the overall mining fleet. So again, that is a very expensive cost. So you can see they had to raise a significant amount of capital in order to do that. And back then, the price of Bitcoin was nowhere where it is today. So a lot of what they did then was use equity financing. So they used some at the market offerings. We'll talk a little bit about that in a future slide, but just wanted to kind of talk a little bit about their Bitcoin mining revenue numbers. They did see a nice healthy increase, and that is of course due to the amount of miners they've scaled up. It's also worth pointing out that there was a Bitcoin halving that took place sometime in April of this fiscal year, and that did actually impact the overall number of Bitcoin being mined. And you can see that the price of Bitcoin is just now starting to see that increase. It's typically about a 6-month, 7-month difference between the halving and when the price does start to appreciate, just based off of that supply and demand of that Bitcoin. So the next section I want to talk about is going to be the cost of revenues. So again, this does not include the depreciation and amortization expenses. I have this section here boxed in red. By all means, please make sure you read through the whole section. I'll just touch on just a couple items here. So cost of revenues, again, was 165 million for the year end, which was an increase of 71.9 million, about 77%. So of course, as the revenue is increasing, the cost of revenue is going to increase. But I think it's important to look at the difference in those percentages. So their percent of revenue increased by 125%. The cost of that revenue only increased by 77%. So that is attributed to both the efficiency of their miners as well as the cost of Bitcoin compared to that previous fiscal year. Another section, just jumping down to the end of this last paragraph here, they said that they also incurred some hosting fees of 27 million, as well as some profit sharing fees at 4.7 million. So again, that talks about those co-locations. That was both at the GRIID infrastructure location in Tennessee, as well as that New York mining location. So again, I am looking forward to the calendar year 25 starting up, where they will be 100% owned. There will be no more hosting fees or any type of profit sharing fees that have to take place. And jumping into the next slide, this is payroll expenses. I think it's important to look at this number. Obviously, as they're increasing their mining fleet, they're going to need technicians, they're going to need different operators to be able to run those pieces of equipment. Again, so it does make sense that you would see an increase in their employee count, especially as they're adding additional sites. Not all of this work can be done remote. You need people actually at these facilities to ensure that all of these miners are operating as they should. All right, now jumping back into payroll. Again, they had a total payroll of 74 million in fiscal year 24 compared to 45 million in fiscal year 23. So that increase again was about 106%. And as was mentioned, the increase was primarily contributed to a significant growth in locations, increase in employee headcount, along with employee bonuses during the year. So as I mentioned, as they take on additional locations and add more miners to their fleet, they're going to need more people to operate that equipment. And looking into the next section, this is their general and administrative expenses. You can see here they did have an increase as well. They had a total of 30 million in fiscal year 24 compared to 20 million in fiscal year 23, representing an increase of about 9.3 million. And again, the G&A for them includes, but it's not limited to, taxes, licenses, insurance premiums, travel expenses, and rental expenses. So again, this is not general administration in terms of any types of headcount. Payroll is a separate bucket here for the company. And the last section I want to talk about at the very bottom is this realized gain on sale of Bitcoin. What did they realize for sale in the fiscal year 24? They had a total sale of 1.3 million in the fiscal year 24. All right, and the next section, I think this is very important. We spent a little bit of time on here, and this is that impairment expense. They had for the total fiscal year 24, they had a total impairment expense at 189 million, and just the quarter 4 was 7.8 million. The remainder of that was actually in Q3. So if you did go back to that previous quarter, you look at their total cost of operations, you can see it was significantly negative compared to quarter 2. And a lot of that had to do with this impairment amount. So in Q4, it looks like they've kind of finished up what they needed to in terms of impairment, just adding an additional 7.8 million. We'll talk a little bit about that number on one of the tables as we continue on, but just want to kind of point that out here in this paragraph. Next is going to be the depreciation and amortization. You can see they had an increase to 154 million from a depreciation amortization standpoint compared to the same period in 23, which was only 120 million. So that delta is at 33.8 million. So an increase in depreciation and amortization. And again, that makes sense. They actually explain here is due to the increase in their miners and their mining related equipment. So of course you're adding 100,000 miners to the fleet. They were retiring some of their older miners as well. So you would expect to see some depreciation in each one of these fiscal years moving forward. Looking at other income and expenses, I think this is a really important thing. I love to talk about this, and this has to do with how they are taking advantage of some of that interest income. So if they have a significant amount of cash, some capital on hand, instead of just putting it in a bank, they're actually finding ways to make some interest back on it. For the fiscal year 24, they made a total interest income of 6.6 million, and they do have a debt interest expense for fiscal year 24, and that had a total of 2.4 million. So looking at the income expense for their cash on hand versus their debt, you can see that they actually had a positive net in terms of their cash versus debt expenses here. So that is a very important aspect. I think that their finance team did a great job of making sure that they had value to that cash on hand, and not just, like I said, putting it in a bank and having it sit. Next section I want to talk about is going to be that net loss for continuing operations. So looking at fiscal year 24, you can see that they had a total of 145 million on net loss. Again, I want to point out that they had that large impairment of around 188 or close to 190 million for the fiscal year. So if you were to take that away, they would be sitting at closer to about 48 to 50 million in the positive. So instead of having a net loss, they would have had actually a net profit. So again, that impairment is, in my opinion, what is detracting from their overall fiscal year in terms of their net loss versus potential profit. Jumping back in here, let's look at fiscal year 23. So they had 133 million net loss. So they did have an increase in net loss. Again, in fiscal year 23, they had no impairment fees at all. So again, I think they've done an excellent job of continuing to push and increase their margins. And we will see an even stronger fiscal year 25, quarter one, ending here at the end of December, just based off the cost of Bitcoin. And as they keep continuing to increase their exahash rate, that profit margin is looking healthy, and they are starting to mine more Bitcoin each month. All right, next section is going to be the liquidity and capital resources. So this is their assets versus liabilities. They had a total in assets of 1.96 billion. Compared to their total liability coming in at 201 million. So almost 2 billion in assets versus about 200 million in liabilities. To me, that is a very healthy ratio of assets to liabilities. So they've done a great job of continuing to grow their assets without incurring a significant amount of liabilities. And again, they did a lot of that based off of some of those equity financing agreements, those at the market, in terms of their shares. And we're going to talk a little bit more about that as we continue on. And right here, I have a box here. This is their financing activities from continuing operations. So how do they continue creating that nice large asset amount, as well as that Bitcoin HODL? And that had to do with a lot of these financing activities. You can see here, their total amount came out to 1.249 billion. Compared to fiscal year 23 at just 357 million. So quite a bit of financing activities going in, and you can see their cash flow from financing. They did mention that it's primarily due to proceeds from their at-the-market offerings. So they had a total generating cash of 1.231 billion, which contributes to about 106 million shares at a weighted average price at 11.43 per share. So again, I think that's important to show here. They are using shareholder equity to provide capital for the company, but they are converting a significant amount of that capital into assets. So they're purchasing additional miners, continuing to stay very competitive in this mining sector. I do feel that the equity to shareholders will continue to gain value as this price of Bitcoin continues to increase, and as they continue knocking on the door of potentially becoming the #1 Bitcoin miner, if they can get that exahash rate up to 50 before Mara does. And for those of you that like to look at tables, here is their asset and liability table. Go ahead and pause the video here, and I'm going to continue on. All right, this next section here, this is going to be the stockholders' equity. So we talked about how they used that for financing, but how much of that is still remaining from an equity standpoint. You can see that there's a total stockholder equity as of the end of fiscal year 24 at 1.9 billion. So of course, that is going to be their total assets, compared to just 1 year ago at just 761 million. So they've done a great job. They've doubled their total assets, utilizing these different financing agreements as they continue to build their business and infrastructure, as well as those assets in miners. And I think it's also worth showing here, you can see at the end of fiscal year 24, they had a total amount of issued shares at 270,800,000 compared to a previous year at 160,184,921. So the delta there would be the amount of additional shares that were added due to either financing or other activities, whether it be employee compensation plans. But as you can see, based on the financing numbers, a little bit over 100 million of those shares came into effect for that. And this next table is going to be their revenue as well as their cost of operation. So again, if you'd like to look over some of these lines, line at a time, please feel free. And on this table, I wanted to stop really quick and talk a little bit about the impairment expense. So this is their fixed asset. So we talked about how they incurred that impairment in fiscal year 24. This is that total. It came out to 197 million impairment. Compared to previous year, there was no impairments. So then jumping down to the bottom of this table, you can see their total comprehensive loss attributed to common shareholders. So their loss for fiscal year 24 came in at 149 million compared to fiscal year 23 at 138 million. So they did incur a larger loss this fiscal year. However, again, I think it's important to show that impairment number. If that impairment number is removed, they're actually in the positive for the year. So again, if they are able to do a better job on their depreciation, now that they have a better understanding of how these miners are retiring, I think that impairment expense should not play into a factor. And I think they stand to have a very nice profitable quarter, potentially, and the rest of the fiscal year 25 could look profitable for them as well, as the Bitcoin cost continues to rise and their HODL continues to grow. They're going to have some great opportunities to continue generating some additional passive income, if you will, with that Bitcoin HODL. So it's going to be interesting to see what kind of financing activities they do with that HODL, as well as what type of exahash rate they end up getting into early on in fiscal year 25. And if you'd like to understand what the per share count loss looks like, you can see here on this table, fiscal year 24 is coming out at 69 cents per share compared to fiscal year 23 at $1.30 per share. So again, the reason why the loss per share went down is because the share count did increase by a little over 100 million in fiscal year 24. So keep that in mind as you're comparing fiscal year to fiscal year. And if you like to look at their preferred stock, common stock, and some of this other total shareholder equity lines, you can compare fiscal year 23 to fiscal year 24 and really get a little bit further breakdown on the impact of those shares and exactly where they all came from. And one of the last big tables I want to talk about is going to be their cash flows. Again, I'm not going to go through all the details, but if you'd like to see a little bit more and kind of hone in and get more granular on the cash flows, by all means, go ahead and pause here and you can take a look at each one of these line items. So this is going to be their cash flows from investing activities. What all did they actually spend? They spent a total of 920 million in investment activities. You can see it has to do with a lot about these different miners they purchased. That was a pretty heavy amount, or at 740 million. And you can see some of these different asset acquisitions. Again, some of these are just the land. Others may have been some infrastructure already existing here. Those numbers are actually quite small compared to their miners. So you can see that between the fixed asset and the miners, that is a significant amount of spend in this fiscal year 24. And this slide here, this is their cash flows from financing activities. So what all did they actually get in terms of proceeds? So you can see some proceeds from loans, as well as some proceeds from their equity offering. So we talked about that at the market offering there, and that's a $1.231 billion. So looking at the net cash provided by financing activities as a whole, came in at about 1.25 billion. And then how much cash and cash equivalents did they end the fiscal year with? That was about 124 million. So they did spend a significant amount of their cash on those miners, as well as some strategic acquisitions and asset purchases. And for those of you that love to look at the different loans that they currently have, Here is one additional slide. This has a lot to do with the common stock issuance year over year. You can see from fiscal year 22 to 23 to 24 how that stock issuance increased. And the different methods at which it did. Some of it has to do with this ATM offering. Some of it is different settlements of restricted stock. And then some of it has to do with their stock options and warrants. So again, go ahead and take a look at this breakdown here. All right, and then one last thing, some of their commitments. So these may be just deposits, but some additional purchase order agreements that they still have cash to be going out of. You can see they have some purchase of modular immersion data centers. So this is the latest and greatest technology. This is much more efficient than the air-cooled miners is this immersion style. And as they build out more of this green land, which is just this barren land that they build their own infrastructure, their own data centers, their servers, and put in their miners, this is where they're able to actually put in these immersion data centers. So you can see they have a total of, they entered a contract for 165 million here for these immersion centers. And I think this is going to play a big factor in fiscal year 25 when you look at that increase in exahash rate. Also, you can see some of the purchase of Bitcoin miners. They have this breakdown as well. Talks a little bit about this bitmain purchase order, what they've already purchased, what there still is left over to purchase. And then they talk a little bit about each of their fiscal years, how they have it lined out, what the kind of contractual obligations. So they have a total obligation for cash of 268 million for fiscal year 25. So again, depending on how much Bitcoin they end up selling, as well as what type of at-the-market offerings happen in this first quarter of fiscal year 25, this will let us know how much fundraising it's going to take to be able to make whole on this financial commitment here. All right, and finally, the last slide I want to cover with you all. This has to do with the subsequent events. So events that took place after the end of their fiscal year 24, they do share some of that with their investors here. So you can see starting with that at-the-market equity issuance. So there was some additional shares that were diluted into the common share count. Don't hate me for using the word dilution. That's what it is, folks. But they do it for a purpose. They do it to increase on their assets, they increase on the number of miners to keep them competitive. And a lot of that will be yielding some significant benefit as the price of Bitcoin continues to rise, as we're seeing today. So getting into this, so from October 1st through December 3rd, you can see that an additional 16.6 million shares were issued. So take that and add that to that 270 plus million. You're coming in around 286 and maybe 290 or so, somewhere in that range on the share count. Again, they did increase their total allowed shares or the authorized shares, to go from 300 million to 600 million. So they still have an additional 300 million shares available for any additional issuance, whether it be at the market offering or other types of potential, maybe some kind of secured notes. They do have 300 million available for that. So again, if there's any additional assets, any acquisitions that may come up that do look rather enticing, that do follow CleanSpark's operational plan, they do have some additional shares that they can use as collateral, as leverage to create those either at the market offering issuance or some different senior convertible notes. So again, just want to kind of point that out there as well. So they do still have some significant leverage that they can pull. Moving on, their GRIID acquisition. We know this took place at the end of October. They put out a press release, put out some 8K filings as well. But now that colocation is fully owned. They are now a subsidiary of CleanSpark, fully owned by CleanSpark. So at the end of this calendar year, starting calendar year 25, they will be 100% fully owned and operated. That New York location, that contract is expiring at the end of December. Looking into their long-term incentive plan. Again, you can pause here and kind of read through all of this. This does go through some additional changes to those companies' compensation committee and board of directors. some of their different improvements on how they established some of these long-term incentive plans. So again, this is just different things for various executives, various directors to continue to kind of feed their ambition, kind of incentivize them. Looking a little bit further down, you can see their increase in authorized shares. I already talked about this going from 300 million to 600 million. There was a shareholder vote that took place and that was approved. And then the last thing is some sale of miners. So between October and November, the company did enter into a sale and purchase agreement with some third-party companies, and they were able to sell approximately 29 million of their miners. So again, looking at the 29 million, adding that with the 191 million that they got from the ATM offerings of the 16.6 million shares, they've already raised in terms of capital an additional 220 million. So if you recall, they needed about 268 million to cover those committed orders in fiscal year 25. They've got 220, so only about a 40 million dollar gap. But if you recall their free cash on hand, they've got over 120 million free cash. So they're already set in a very good place to be able to pay all those debts, or I should say pay all those committed orders. So again, with those orders being paid, with them receiving those additional miners, that exahash rate will start to climb as they already have in their forward guidance, getting to that 50 plus exahash rate. I am very much so looking forward to it. They already have a healthy infrastructure with plenty of megawatts to be able to plug some additional miners into. So all in all, I hope you enjoyed this little bit of a video covering the annual filing. I try to make sure that I cover a little bit of everything here. So if you feel like I missed anything, drop me a comment. Let me know your thoughts on that. If I misspoke on anything at all, please let me know. Again, this isn't financial advice. This is just me as a humble investor taking the time to break down CleanSpark's 10K. So with all that being said, I hope you all really enjoyed this video. If you did, please consider giving a like, share it with some friends. Please subscribe to this channel if you haven't already. Again, drop a comment. Let me know your thoughts on this. What other types of content would you like to hear me cover? Is there anything interesting with CleanSpark that you feel that I have missed in this coverage or in other coverage for this company? Let me know. And with all that said, I hope you all have a great rest of the day, and I'll see you on the next one. Well, hello and welcome to another video by Financial Ernie. On today's video, I'd like to talk to you about CleanSpark, the Bitcoin mining company. I'd like to start off by talking about the purchase price for some of those miners they disclosed in their 10K. I'd like to talk about some of the stats behind those miners. Then I'd like to jump over to their all-in operating cost to mine each of those Bitcoin, and then get an estimated profit margin, and then jump into the November mining update, as well as some of their other operational updates. So without further ado, let's get right into it. So starting from the 10K, I did share this in my 10K overview, but I wanted to spend a little bit more time here because I think it's important as they continue on month by month to really focus in on those miners and how those are going to help expand their exahash rate. So again, based off of these commitments and contingencies, you can actually figure out what they paid for that bulk volume pricing for those different miners. So for those S21 Pros, the average cost of those was $3,744 per miner. And then the S21 XP, that's the immersion style. So this is the more efficient version. They use immersion cooling instead of air cooling. They paid about $6,450 per miner. All right, so taking a look at these immersion cooled miners a little bit further, you can see here at the bottom, this is from the bitmain website. You can see this S21 IMM. This is what is actually called out in the press release between CleanSpark and Bitmain. They talk a little bit about looking at this current model versus the original year one model, if you will. You can see they have about a 25.5% increase in percent of hash rate, and then also a reduction in energy costs, or that energy efficiency ratio, coming in at 15.6%. So pay close attention to those percentages as we continue on. All right, before we talk about those percentages, that's going to actually have to do with the November mining update. I wanted to take a little bit of time to talk about this all-in Bitcoin mining. So again, this is from their 10K, this excerpt here. And then these are the per Bitcoin amounts. So each Bitcoin, what's actually costing the company. They break it down just looking at the energy costs, coming in about $21,401. And this is as of September 30th, 2024. So as their fleet efficiency continues to increase, which is going to be a reduction in the joules per terahash, you're going to notice a reduction in the cost to mine that Bitcoin. However, as they upgrade their miners, there will be an increase in the cost of each of those miners. You can see the difference in price per miner looking at the immersion style versus the air cool style. And you can see that's going to play a factor when you look at the miner depreciation per Bitcoin mined. So you're going to see that coming in at 17,156. And then there's also an accelerated depreciation per Bitcoin mine, an additional 1,170. So again, as of September 30th, based off of the current Bitcoin mining fleet that they had and their current fleet efficiencies and power costs, it cost them a total of $39,936 for each Bitcoin mined. So looking at the November average price of Bitcoin mined, it was $84,356 per Bitcoin. So looking at that and taking this revenue, this all-in cost as a percent of revenue, it's about 47%. So that puts them at about 53% of profit margin per Bitcoin mined. So let's go ahead and jump into the November mining numbers. All right, and looking at their press release they put out on December 3rd, this is for the November month ending mining information. So first thing definitely worth noting is the total Bitcoin mine coming in at 622. Again, based off of that 10K information on their cost to mine each Bitcoin, you can calculate, and of course this is an estimate just based off of some of the efficiencies that were provided for the September end. They were able to get $27.6 million of profit. And then looking through some of their other numbers, calendar year 2024, they Bitcoin mined 6,356. Total Bitcoin HODL by the end of November was 9,297. Bitcoin sold in November at 26.11, which means they were taking advantage of these higher price of Bitcoin. So with higher revenue of Bitcoin mined means much better in terms of gross profit margin. So again, smart move by CleanSpark to take advantage of some of the Bitcoin they're mining in order to help pay for maybe some of the G&A or some of the other expense lines. Moving on, deployed fleet at 195,059. Month-end fleet efficiency at 19.05 joules per terahash, and then month-end operating hash rate at 33.7 exahash per second. So based off of their total fleet and based off of the amount of Bitcoin mined, you can go ahead and calculate that it took about 313 miners per Bitcoin to mine, and then about 0.0032 Bitcoin was mined per month per miner. So besides that, I also have the September ending operational data. I went ahead and used this because this is, of course, what you can find on that 10K release as well. But if you look at the fleet efficiency back in September, it was at 21.94 joules per terahash. So it's about a 15% efficiency improvement just from September to November. And then month-end operating hash rate back in September was 27.6 exahash per second. Which is a 22% hash rate improvement looking at their November numbers. So again, they're doing a much better job in terms of efficiency. Just looking at some of the efficiency percentages here, I have a feeling that they are getting some of the second gen S21 immersion miners up and running. Could be wrong, but just based off of some of the percent increases, it definitely looks like they are definitely putting some advanced hardware into their mining fleet. And then there's some additional updates, but before we get into that, just wanted to point out again, the average Bitcoin mine in the month of November is 84,356, and that was used in order to calculate what the profit came in at for the month of November. So I want to go ahead and first start out with a quote from CEO Zach Bradford. He says that 2 turnkey Bitcoin mining sites near Clinton, Mississippi have been completed and are expected to be fully operational, providing an added 1 exahash per second by the end of this week. So by the end of December 3rd week, which would have been this past Friday, and expected expansion projects in Tennessee to go live by mid-month, paired with their ongoing upgrades, so their minor upgrades, will bring them over their year-end target of 37 exahash per second. And then this is what I really like. He does state here, we have our eyes on 2025, and our plan is to continue beyond the 50 exahash per second in the coming quarters. Not coming years, coming quarters, folks. So looking at some of the other opportunities they do have, they already mentioned the Clinton, Mississippi, but looking at that Cheyenne, Wyoming location, this is for 2 immersion cooled Bitcoin mining data centers for a total of 75 megawatts. Once that station is fully energized and operational with those latest and greatest generation of the S21 immersion XPs, they have an additional estimated 5 exahash per second. So if they beat that 37 exahash per second by the end of the year, and then they get this additional 5, they are going to already be very close to that 50 exahash per second goal that they have for 2025. So I'm looking forward to seeing some additional updates. Hopefully at the end of December, we'll get that update come first week in January for their mining numbers. And again, this is going to be another quarter ending. It should be a great quarter in terms of revenue with the Bitcoin mining costs, mining price the way it is right now. Their cost of revenue or cost of mining compared to revenue, it's going to be very nice, above 50%, as long as the Bitcoin cost stays up as it is right now. So I am very much looking forward to seeing from an operational standpoint, from a revenue and profit margin standpoint, how they're able to finish this Q1 for fiscal year 25. All right, and that wraps it up for me, folks. I hope you enjoyed this video. If you did, consider giving it a like. Subscribe to the channel if you haven't already. Drop a comment. Let me know your thoughts about CleanSpark Inc., the Bitcoin mining company. What other kind of content would you like to see me cover for them or for other stock out there? And with all that said, hope you all have a great rest of the day, and I'll see you on the next one. Well, hello and welcome to another video by Financial Learning. On today's video, we're going to be talking about CleanSpark Inc.'s latest press release as of December 12th, 2024, and it has to do with a proposal for a private offering of convertible notes for up to $550 million. So without further ado, let's get right into it. All right, and before we get into today's press release, if you are wondering at all what a senior convertible note is, specifically what a zero interest senior convertible note is all about, I will be discussing that at the end of this video, but let's get right into this press release. All right, so CleanSpark did announce during after hours through press release on December 12th, the intent to offer in principle $550 million of a convertible senior note, which will be due on 2030. This specific offering will be a private offering that will be in place for specific private institutional buyers. CleanSpark also intends to grant the purchaser of these convertible notes with an option of within 13 days of the initial placement of the convertible note for an additional $100 million in the form of additional convertible notes. So a couple of things that they will be using this money for. The first thing is to purchase some capped calls. This is an excellent way that companies try to hedge their bets against any form of additional dilution for the shareholders. What this means is in the event that the share price does continue to increase, the company will have specific call options set in place, capped at a specific amount of money per share, so that they are able to generate additional income that they are able to pay these specific owners of these convertible notes without having to exercise additional shares to make up the balance. Now, a couple things that we still do not know based on this press release is what the conversion rate will be for these shares, but we do have a couple other specific factors. Before we get into that, let's continue talking about what exactly the rest of these funds are going to be used for. The next thing is going to be $125 million that they plan to use to repurchase shares from these specific lenders. So you may be asking yourself, what's the point of giving them these notes and then repurchasing them back? Well, remember, these are not due until 2030. So this does allow CleanSpark to use these funds for the next few years to invest back into the company, again, to maybe generate additional revenue, scale up their miners, their fleet, as well as some other acquisitions. They talk about all of that. But if you think about it, they're able to use the money now, and then at a later date, they're going to then repurchase these shares that they would be giving back to the investor. So again, it's a great way to be able to leverage that money now and then pay it back later. That's the whole point. And the last thing that they do plan to use this money for is to pay off debt. So they do have a current debt with Coinbase, one of the lenders, and they're going to use this specific convertible note to pay this off. So again, they're going to be knocking out the principal of the remaining loan and not have to worry about that interest rate. All right, a couple of very key things to note as well in this next paragraph here. You can see here that this specific secured senior convertible note will not bear any regular interest rate. So it is going to be a zero interest rate convertible loan. So what this most likely means is that there will be a certain discount that these investors will receive up front. So for instance, in the event that it's $550 million, they potentially will be offering CleanSpark maybe $500 million. Again, I am just speculating here because we don't have these specific terms, but they're going to basically provide CleanSpark with a discounted amount, and that difference they will be receiving whenever this specific note matures, which in this case is 2030. The next thing to note specifically is that this will not accrete. If you want to look up that terminology, basically it means that the principal amount will not grow over time either. So there were a few things that if you are familiar at all with the way that a lot of these convertible notes work, one thing would be that they are interest bearing. So the investor is making money year over year until the note matures. The other way is potentially with a zero interest loan. However, each year that principal does grow a fixed amount. So neither of these two things are true for CleanSpark. It is a regular interest, zero interest loan with no concern of that principal growing year over year. And as I mentioned, they have not announced what that conversion rate is. According to the press release, they are still in negotiations with the investor who is looking to actually purchase this $550 million worth of convertible senior notes. And the reason why they call it senior is in the event that there is ever any kind of bankruptcy for any company, investors that own a senior secured note will actually have preference over just a standard note holder or an investor. These capped call transactions, again, this helps the company hedge their bets in case the price of the stock continues to rise at the time of the maturity date or at whatever exercise price is set up in the final negotiated contract. The company would either have to provide the shares at that specific price, which means potentially dilution to give them the amount of shares that would equate to that price amount, or they may decide to exercise cash. Either way, it would be at an increase if the share price does go up. So when a company chooses to exercise capped calls, again, this is a great way that they're able to kind of hedge that bet, and it's capped because it will be utilized, it'll be able to be exercised up to a specific amount of money, and at that specific capped price, then that's when the additional shares or the additional money would be owed to the investor. But a lot of times the capped amount is at a rather significant increase to the current share price. All right, and as I mentioned, I did want to touch base on a couple of these senior secured convertible notes, some of the definitions behind them, as well as some pros on why companies would want to take place in these types of transactions. So first thing, of course, is the principal amount. We already talked about that in the case of CleanSpark. That's at $550 million, and they do have an option for this investor to go ahead and purchase an additional $100 million worth of these senior secured notes or senior convertible notes within 13 days of the initial transaction. Next thing is interest rate. As we spoke about, there is a 0 regular interest rate for this specific convertible note that CleanSpark is offering. Next thing is maturity date. We already spoke about that. That is set up for 2030. And conversion price. That is what we still do not know. According to the press release, they are still in negotiations with the institutional buyer or the investor looking at this specific senior convertible note. Last thing is going to be a conversion ratio. Again, we do not have this specific information, so the conversion price as well as the conversion ratio is still to be determined. So with those two pieces of information, whoever is still sitting on the sideline waiting to see how exactly, how much of a bullish thing this may be, is probably waiting for that conversion price as well as that conversion ratio. And a couple reasons why companies do take place in these senior convertible notes. First thing is flexible financing. So again, they're able to usually get a lower or no interest rate type of loan for them to be able to put back into capital investments or different things such as was mentioned here, ways to repurchase some of these shares at a later date. Another thing it does is it avoids immediate dilution. So anytime a company does exercise at the market offerings, that is going to be an immediate dilutive effect to the current shareholders. So a lot of times these senior secured notes that have a maturity date a few years out, that gives the company an opportunity to grow that capital and then pay for it either in the form of shares with dilution or potentially back with the initial capital. So it really depends on the company's finances at the point of maturity. Next thing is going to be some tax benefits. So again, if we're talking about specific interest payments, a lot of times the companies can deduct those. In the case of CleanSpark, there's going to be 0 interest. So this really doesn't impact their specific contract that they're still negotiating. And another reason why investors would want to take part in these specific types of senior secured notes, again, it gives them the opportunity to invest in a company without having as much of a risk of a downside on the price action. Because remember, they are going to be guaranteed the specific price of the stock with that conversion rate at that maturity date. So again, it just benefits the investor if the share price continues to go up, but in the event it doesn't, the company is still going to have to pay them that same amount of money back in the form of either shares or that capital. All right, and you may have seen in some other press releases, companies such as MicroStrategy, Mara, and TeraWulf have been utilizing either convertible bonds or senior convertible notes to be able to generate some additional capital. Some of these companies are utilizing their Bitcoin HODL. Other companies are utilizing their specific shares in the form of equity financing. Either way, I believe that the way CleanSpark is doing this is very smart. They are leveraging their equity, but they're doing this at a much later date. At the time that this specific senior secured note will mature, we will have already taken place in an additional halving. Typically after halving, the price of Bitcoin continues to rise because of the supply and demand as the amount of remaining Bitcoin is halved at that time. So it does make it more and more difficult to be able to mine or collect that additional Bitcoin, which does make the price continue to rise. So I do believe that the maturity date that they have negotiated, as well as the fact that it's 0 interest, these are all very good signs. And what the company is planning to do with this capital, again, I do believe that at least in the short to midterm, it is going to be able to benefit the investors that are currently invested in CleanSpark. And then depending on how they leverage this capital in the short to medium term, by the time that the capital does mature, the company will then be able to either pay it back via cash or be able to pay it back via company shares. All right, and with all that being said, I hope you really enjoyed this video. If you did, please consider giving it a like. Subscribe to the channel if you haven't already. Drop a comment, let me know your thoughts about this video. Do you think that this was bullish or bearish for CleanSpark to be able to submit this specific senior convertible note at the price, the maturity date, and the interest rate, which we know is 0? Go ahead and let me know. And with all that said, hope you all have a great rest of the day, and I'll see you on the next one. Well, hello and welcome to another video by Financial Learning. On today's video, we're going to be talking about CleanSpark Inc.'s latest press release. This has to do with their $650 million offering that was just announced as closed. This is that zero interest convertible note. Also, we're going to be talking about the short interest on CleanSpark, and then I like to talk about their playbook that they shared with all of us. I did some research on the SEC filings, and I think that you guys will definitely want to see this, so please stick around. So without further ado, let's get right into it. All right, starting with the PR, this is of course from December 17th, 2024, and has to do with their announcement of this offering coming to a close. They were able to negotiate with this specific investor, and they did opt for the additional $100 million to be added to the offering. So that is a total of $650 million that CleanSpark will be getting funded. There is, of course, some discounts. So CleanSpark did disclose exactly how much of that cash that they will be getting to do some of their operational activities, as well as some share buyback and some of their covered cap calls. We're going to get into all of that. So let's jump right in. So looking at this, of course, I already mentioned this is a 0% convertible note. It's a senior convertible note, and it has a maturity date of June 2030. So there's plenty of good runway for CleanSpark to be able to take this capital and go ahead and invest into their operations. Again, we all know, if you've been watching CleanSpark, that they are not buying spot Bitcoin with this money. Instead, they are looking for investing it into their miners. Their cost to mine each Bitcoin is only $40,000. So, a lot of people say, why purchase spot Bitcoin for $100,000 when you can mine it for just $40,000, leaving you to net profit of $60,000 per coin? And then, of course, as the price of Bitcoin does fluctuate, CleanSpark is still going to be able to take advantage of that. So I do think that this is a rather smart decision by CleanSpark. So first thing I want to talk about is this capped call transaction. They did go ahead and give us the exact details for this. So it does have a capped price at $24.66. That is, of course, a 100% premium over the closing price of when this offering took place, and that was at $12.33. Of course, these capped calls are a way that the company can hedge the share price going up. So instead of having to pay this investor that premium amount, their capped call transaction does cover that increase of share price up to that $24.66 share price. So whether or not they were going to use share equity or they were going to use cash to pay this investor back, this is a great way that they are able to spend some of this initial money in order to kind of cover that and allow some growth for the stock without them getting themselves into a situation to where they have to do some heavy dilution. So again, this is a great way to hedge the dilution going forward. All right, and the second way that the company is able to mitigate some of the dilution is by the share buyback. So you can see here that they did purchase 11.76 million shares from the common stock, and they've went ahead and kind of shelved that, if you will, and they did this using a total purchase of $145 million. So again, this helps from the covered cap call amount at that $24.66. There is some additional breathing room, another 11.76 million shares worth of breathing room, and that actually gets the exercise price before dilution occurs up to $33.67. So again, if you do follow TeraWolf, you would have noticed that they did some similar calculations, some similar activities in their secured convertible notes. The only difference is theirs actually had a little bit of an interest rate for the investors. Of course, with CleanSpark, they're at zero interest. So again, this is a very lucrative secured note that they have gotten themselves. All right, and let's go ahead and get a quote from the CEO. This is from Zach Bradford of CleanSpark Inc. It says, "We are proud to have closed this offering with some of the strongest institutional investors in the world and are excited to share that our growth through 50 exahash per second and beyond is now expected to be more than fully funded from the proceeds." Zach continues on. "In addition to funding the growth to 50 exahash per second, share buyback, capped call, the additional capital will allow us to keep adding the Bitcoin we mine to our balance sheet. Beyond our expansion efforts already underway, we remain well positioned to continue executing on opportunistic acquisitions. Again, Bradford continues. Importantly, this offering provides our stockholders greater clarity on near-term share count, given our ATM offering was completed in early November. And if you were following the filings, they did say from October 1st through December 3rd. They talked about the ATM coming to a close. So it looks like it actually closed sometime in November, but that December 3rd was just the date of the filing, I assume. Continuing on. We have no immediate plans to commence another equity or equity-linked offering, as the capital received from this offering sufficiently covers our near-term strategic objectives. So again, if you're a shareholder, this is excellent news. As you are well aware, there was some dilution that occurred with some of the at-the-market offerings. However, it is great to hear that they do not plan on continuing any more of that. Another key thing to read is that based on this funding, they do not need to sell any of their current Bitcoin HODL in order to continue funding operations. So I thought that was a good little nugget as well. So they will continue to build upon that Bitcoin HODL, but they will be doing that through mining, not by purchasing spot Bitcoin. All right, jumping into some of the proceed information. So it says the net proceeds to the company from the sale of the convertible notes were approximately $633,600,000 after deducting the initial purchaser's discounts and estimated expenses payable by the company in connection with the offering. The company used approximately $90.4 million of the net proceeds to pay the cost of the capped call transactions. If you recall, they did originally say something around $70 million or so, but because this investor did go ahead and opt right away to go ahead and purchase an additional $100 million worth of these convertible notes, they went ahead and increased that capped call transaction amount. Also, $145 million to repurchase shares of the common stock from investors in the convertible notes, and intends to use the remaining proceeds for repayment in full for amounts outstanding under the company's line of credit with Coinbase. They had already announced that, but they are just confirming that is still the objective here with this money. Also, some of their capital expenditures, potential acquisitions, and general corporate purposes. And lastly, they did share a little graphic here in terms of exactly how the shares in the form of dilution, exactly at what price would that dilution impact actually start taking place because of the share buyback. You can see they did provide a good amount of runway for the price without having to get into dilution. That's at that $24.66. And lastly, if you look at that graphic they provided, I will be blowing that up in just a moment. All right, and one other key feature that has been built into this specific offering is the ability for the company to basically call back or decide to close this offering after 3.5 years if the share price does reach a 130% of the conversion price. So that would be at $19.23. Again, a couple other things about this offering. They do talk about the capped covered call. You can see that provides runway for the price to continue to rise without impacting dilution up to $24.66. And then at that point in time, that's when that share buyback will take place. And that gets you all the way to that $33.67 price range. At that point in time, that's whenever there will be some dilution in terms of share count. But if you're already currently invested in CleanSpark, at that point in time, there would already be a significant amount of profitability for the shareholders. All right, jumping into this. This is the short interest. First thing I want to show, this is going to be the Friday short interest compared to the Monday short interest. And then if you want to look at this, this is a 7-day graphic. You can see how the short interest has been growing. So on that Friday, the short interest had grown by 17.8 million shares. Jumping in one additional day, you can see it went up to 19.92 million. And again, this is just a 7-day period. On the next slide, I'm going to show the overall short interest amount. But a couple other things really important on this slide is going to be the days to cover. You can see it sitting around 2 days on both that Friday and on Monday. All right, and on this slide, you can actually see the live short interest. Again, this is a feature from Ortex, as well as the amount of shares available and the cost to borrow percentage. And again, this is just from one of the exchanges. Don't get me wrong, there is various amounts of shares available, as well as percentages for cost to borrow. But this is just a good baseline, if you will, to get an overall idea of what's going on these short interest. So again, total amount of shares shorted on Monday was 66.11 million. That equates to about 23.2% of the outstanding shares. And then looking at Tuesday's number, it jumps up to 73.57 million shares being shorted. That is 25.82%. This is a very heavily shorted stock. And with this information that just came out, I feel this does give long investors somewhat confidence looking at the share buyback. This is going to put additional strain on these short interest parties. If you also pay attention on Monday's live short interest, you can see that there were still 4.7 million shares available for shorting or for borrowing at a cost to borrow about 0.58%. When you look at Tuesday's availability, it's down to just 800,000 shares, and the cost to borrow has already doubled. It's up to 1.12%. So I think that, again, kind of shows the impact of the share buyback, how it takes away a lot of the liquidity, if you will, or the amount of the volume, the sheer volume of shares available to borrow in order to short. So again, I think that share buyback happening immediately was very good for the company. And it does give the investors that have this outstanding convertible note a little bit of confidence on their long exposure. And lastly, I'm glad you guys stuck around, this is the CleanSpark playbook. I took some of the notes from the last two SEC earnings filings from CleanSpark, and I kind of put it all together here. I'm going to go ahead and break down their commitment of spend as well as their cash on hand. Take a look at some of these miners. We're going to look at some of the statistics here and then get an idea for exactly how they're going to get to that exahash amount that they're planning for in 2025. As well as take a look at how they could utilize some of that remaining capital, some of that remaining cash on hand to get there. So first thing I want to take a look at is going to be that green line up there. Starting at the top left, this is going to be the initial purchase order for 100,000 of these S21 Pros. Each one of these S21 Pros gives you 234 terahashes per second. That is the amount. And if you're not familiar with the conversion, for every 1 exahash, it is 1 million terahash. So when you want to convert this mining fleet over to exahash, you're going to need to take those numbers, multiply by the total number of miners, and then divide by 1 million. And that is how you can get that exahash amount. So you can look here at these 21 Pro amounts. For the 100,000, that provides 23.4 exahash. This PO was actually announced, and it's part of an April 2024 PO. The second PO that was announced, and these are both part of this bitmain vendor. This was for a total of $167 million. And this is for those S21 XP immersion style. So these are the more efficient style, these immersion coolant type of miners. You're going to get a better, more efficient in terms of your exahash compared to the kilowatt consumption here. So looking at this, each one of these miners provides 300 terahashes. So again, looking at the amount at 26,000 miners, these are the immersion miners, this provides CleanSpark with an additional 7.8 exahash per second. And this PO was actually placed in August of 2024. So looking at those two on their latest earnings report, this would be their 10K. They did disclose a little bit about the financial activities behind these purchase orders. You can see that as of that September 30th date, they had already made a total amount of payments at 376 million and change. And you can look, they also mentioned an accounts payable amount at 49.9 million. So that's going to leave them with a little bit of additional committed spend, and we're going to break that down in just a minute. I did want to also go over this orange bar though, since we're still talking about these miners, and this is the Avalon A1566Is. These are immersion miners as well, except these came from Canaan, not from Bitmain, and this purchase order was actually put out by Canaan on November 1st. So this PR would be after the earnings report. That is why there's no mention about this in the earnings report. This is for 3,800 of these Avalon miners. And if you do the math on that, each one of these miners is 249 terahash. So the total amount of miners gets you almost 1 exahash at 0.9462 exahash per second. The only thing that this specific press release from Canaan did not include was the cost. We don't know what the price point was that CleanSpark purchased these miners for. So that is the only uncertainty that I don't have on this spreadsheet. Just wanted to disclose that with you all. You can see I have that in red there. Jumping down into future spend. So again, if you look at that earnings report, you can see exactly what CleanSpark is planning on spending some of their additional capital on, starting with the remaining miners. So there's a remaining PO open at 115 million or 115.299 million. There's some modular immersion data centers. This has to do with some of their build outs that they have going on right now for another 135 million. The construction information, or the construction locations currently in process, that's 15.2 million. And then their Tennessee real estate. So there was some additional cost involved with that GRIID acquisition that included some retail estate. So this was $2.5 million for that. There was some power deposits. So whenever CleanSpark did purchase GRIID, they actually had to pay their power deposit back as part of the purchase agreement. Also, jumping into today's offering, I went ahead and added on both the capped call transactions as well as the share buyback amount. So the total spend comes in at $509 million. And that is based off of all of the information they've already disclosed. And then you go ahead and look at the cash on hand, and you're going to see how I was able to come up with the remaining cash. So you can see that as of September 30th, they had a total cash on hand at 121 million. And they also disclosed that after September 30th, they raised an additional 191.6 million when they closed out the remaining of that at the market offering. And then miners sold. They actually did get some money from third parties with the sale of some of their older, more aged miners for $29 million. And then the last thing, of course, is the cash from this convertible note loan. And this is the one that is not due until 2030. So if you look at their overall cash, they're sitting at a nice, healthy, almost $1 billion at 975 million. Subtract from total spend, they still have $465,953,000 available. So I have a couple other ideas that they most likely will be taking advantage of in order to hit their 50 exahash per second goal, their target for calendar year 25. So starting off, if you do look back on their 10Q, this would actually be the one back from June. You can see that they did have an open available purchase order. It's called an FSPA for $322,500,000. That would allow them to purchase an additional 50,000 of these S21 XP immersion for each of these. Remember, this is for 300 terahashes per miner. So that would actually provide them with a total of 15 exahash per second. So again, if you were to add this pending purchase order, or this potential purchase order for these miners with the rest of these upgraded miners, you're going to add all of this up, and it's going to come out to 47.1462 exahash per second, very close to that 50 exahash per second goal. And remember, folks, they currently have a total of 195,000 miners in their fleet as of November. All of these new miners combined would be 179,800. So again, they still have all of those other miners. They did mention that they will continue using some of those aging miners where it makes sense in some of their locations where they have a very good cost per kilowatt hour. So again, I think that just based off of these upgraded miners, as well as utilizing some of their existing miners, they are well on their way to that 50 exahash per second. So you can see right here from a playbook situation, it looks like CleanSpark is definitely on the up and up. A couple more things. Again, that note will be maturing in 2030. So let's look at the ROI involved with that. So you can see I have here, looking at this 47.1462 exahash per second. That is the amount of hash rate that these upgraded miners will be providing. That actually gets them a total monthly Bitcoin mining at 907. And this is as of the current hash rate. Of course, as more and more Bitcoin is mined, it does become a little bit more and more difficult. So you probably want to look at a rolling out, or you probably want to look at more of a 6-month average on Bitcoin mined. But again, remember, I'm using the September efficiency rate, so the cost to mine. And you can see based on that September disclosure, the cost to mine, this includes the miner's depreciation as well as some accelerated depreciation, comes in at $39,936 per Bitcoin. So again, that still gives them a very nice, healthy profit margin, especially with Bitcoin sitting at the 6-figure amount at 100,000 or more. So we're going to go ahead and use 100,000 cost per Bitcoin in the remainder of this ROI as the example here. So you can see their monthly profit. This is not revenue, this is profit. Their monthly profit to mine Bitcoin with this 47.1462 hash rate, exahash rate, is going to provide them with $54,497,000 of profit. Looking at the yearly profit margin, again, if Bitcoin remains at 100,000, we're looking at $653,975,000. Just looking at the specific miners that are on purchase here, compared to the cost of Bitcoin and everything, you can see that there is a ROI of 19 months. So that's pretty good if you consider a lot of these miners have about a 3-year life on them. So after that first 19 months, they're going to be in the money. So again, any of the depreciation or anything like that in terms of the miners, you may actually see an even lower cost to mine the Bitcoin at that point in time. Again, it's all going to come down to what the hash rate requirement is going to be to mine a Bitcoin, month over month. Of course, that will be changing. And it's going to be important to make sure that they are keeping very good relationships with their power providers. They want to make sure that they can keep that kilowatt per hour rate at a low amount. All right, so based off of the playbook, again, that CleanSpark has laid out, this is all publicly disclosed information here. It does look that they are well poised for the remainder of the fiscal year to not have to really worry about any more of their ATM or any more of the equity financing. It looks that if they go ahead and utilize this capital to purchase these additional miners, they will be able to recoup plenty of profitability in terms of mined Bitcoin to be able to pay off that entire convertible loan in full. Again, this is 0 interest. And at that point in time, when it's due, they will have already completely paid off their miners and stacking Bitcoin on top of that. So again, I'm very excited to see the progress of CleanSpark, and I'm sure we will be getting some more announcements as more and more of these latest model miners are implemented into their fleet. All right, I'm not going to get into the whole Bitcoin hodl and the amount of interest that they could potentially bear. None of that information has been disclosed yet, so a lot of it is going to be very speculative in nature. I like to stick to what's been provided to all of the investors via filings as well as some of their presentations. So with all that being said, I hope you enjoyed this video. If you did, please consider giving it a like. Subscribe to the channel if you haven't already. Drop me a comment. Let me know your thoughts about this. How did I do in covering this convertible note offering, as well as breaking down some of these financials? And with all that said, hope you all have a great rest of the day, and I'll see you on the next one. Well, hello and welcome to another video by Financial Learning. On today's video, I'd like to break down CleanSpark Inc. and talk about how they chose to invest in themselves and their miners instead of buying spot Bitcoin. We're going to review the bull case as well as the bear case for the Bitcoin pricing and how that impacts these various convertible notes, the ones that choose to use spot Bitcoin purchasing versus investing in additional miners. So without further ado, Let's get right into it. All right, and I'm going to be going over 4 different scenarios. This first one is going to be a bullish case, followed by a bullish ramp up case, and then we're going to go over a bearish case and a bearish ramp down case. And when I talk about ramping up and ramping down, I'm talking about the price of Bitcoin over a period of time. And here's a couple of the different variables I want to go over with you. Each one of these scenarios, we're going to be looking at a 3-year period. I chose 3 years based off of 2 reasons. The first being that these miners typically have a 3-year lifespan. So after 36 months, they are looking to get them traded in. That typically just has to do with the technology changes over those 3-year periods. So besides that, the other reason that I've chose this period is that the investor that provided these 0 interest convertible notes does have an option somewhere around the 3 to 3.5 year period to exercise or to recall a certain amount of this note. They do have this, I believe it's just a single day in time that they are allowed to take action. And then after that, it does go back to that maturity date, which is around the 2030 period. Or of course, there are some other options depending on the price of the stock. So jumping back into this specific comparison here, I want to talk first about this spot Bitcoin. So my assumption is that the spot Bitcoin is purchased at $100,000 per coin. And at that loan amount of 322 million, that allows a total spot Bitcoin quantity at 3,225. So let's fast forward 3 years later. Again, I'm assuming that the price of Bitcoin jumped up to 150,000 and it stayed steady state for 3 years. You're looking at the value of that spot Bitcoin to come in at 483,750,000 for a total P&L profit of 161,253,000. So jumping over to the mining. Again, as I mentioned, this specific loan amount of 322,500,000, it has to do with this future purchase sales agreement that CleanSpark has with one of their mining vendors for them to purchase in excess the amount of miners in order to have 15 exahash. So that 15 exahash is going to be what I'm using to calculate the rate for mining in order to get the total amount of Bitcoin mined each month. And then we're going to be subtracting the cost to mine each of those Bitcoin. And CleanSpark did share that cost with us. That is $36,250 per coin. So we are actually going to be selling the cost of the mined Bitcoin. Going to be subtracting that amount each month, and they're going to be left with a profitable amount of Bitcoin that they're going to be adding to their HODL. That's how I'm doing this specific calculation. So again, based off of this, they would be able to mine a total of 285 Bitcoin month over month. And another caveat is that I am not looking at any type of hash rate challenges that may occur over time. As more and more of these blocks are mined, there is some level of additional difficulty. So there is a difference in Bitcoin mined for this hash rate. But for the intents and purposes of this comparison, I am just leaving that at a steady state. So again, looking at the cost to mine versus this 150,000 per Bitcoin, that gives you a healthy profit margin at 76%. So the profitable Bitcoin per month would be 216.13 Bitcoin. So in order to break even on the loan, that $322 million loan at 150,000 per Bitcoin, you'd be able to break even at 9.95, leaving an additional miner life of still 26 months. So looking at the additional Bitcoin earned, that's going to be 5,630.5 Bitcoin. And again, that is the amount remaining if the loan was paid in full. So before paying off this loan in full, the profitable Bitcoin for the 3 period would be 7,780.5 Bitcoin. So again, the profitable amount of Bitcoin before paying off the loan actually yields at 150,000 per coin, $1.1 billion. And then looking after subtracting the price of the loan, the P&L profit comes in at 844 million. So 844 million P&L versus 161 million P&L. In this specific scenario, it is very easy to see that investing in the miners and mining the Bitcoin would be the way to go. All right, and in this scenario, it's going to be another bullish scenario, but this is going to be a bullish ramp up scenario. So I took the assumption that each month the price of Bitcoin would increase by 1% over the course of a 3-year period. And you can see that at the end of the 3-year period, the price of Bitcoin would come in at $141,660 per coin. So again, let's start with the spot Bitcoin. So again, purchasing Bitcoin for $100,000 per coin at the start of this period would still yield you with the same 3,225 Bitcoin, again, using that same loan amount to keep everything even. So at the very end of the 3-year period, again, this is just if you have a Bitcoin hodl, not doing anything with it. We're not looking at any type of interest rate, any type of yield you can get off of the Bitcoin hodl treasury or any other types of derivative financing that could take place, or any types of ETFs or anything of that nature. We're just looking at holding that Bitcoin treasury. So the value at the end of the 3-year period would be $456,854,000 for a P&L profit of $134,354,000. All right, so let's jump over to the miners. So again, looking at the Bitcoin price appreciating by 1% month over month, you can see starting from month 1, they would be at 63.75% profit margin. And you can see that profit margin continuing to increase month over month as the price of Bitcoin does increase. So they would actually have a break-even period in terms of the loan payoff. So the profitable amount of Bitcoin to get them that 322 million would actually take place March of 2026. So after that period, the rest of that profitable Bitcoin would just go into their Bitcoin hodl to create a large treasury. So at the end of the 3-year period, looking at the total amount of Bitcoin mined for profit, and this is before subtracting for the loan, they would have 7,118 Bitcoin. Again, just to remind you, what I am saying is that every single month they are going to be subtracting the cost to mine the Bitcoin, and they're going to be paying for that in Bitcoin. So there's going to be a delta of profitable Bitcoin that they're going to be accruing month over month. And then looking at the end of this 3-year period, their Bitcoin hodl treasury, if you will, would be, again, we're talking $141,000 per Bitcoin. They're going to have a total Bitcoin value at 1 billion. And then subtracting the loan, they're going to have their P&L profit at 685 million. So again, 685 million for mining with this 1% melt up of Bitcoin price, compared to just buying spot Bitcoin at the end of the 3-year period at the same Bitcoin price, having 134 million. So again, in this other bullish case scenario, it still makes more sense, in my opinion, to be mining Bitcoin versus just purchasing spot Bitcoin. All right, and jumping into the bearish case, again, this would be still purchasing spot Bitcoin at $100,000. So there would be 3,225 available using that same loan amount, as well as purchasing those miners with that same amount of money. So jumping into this, I went ahead and state that at the end of the 3-year period, Bitcoin price would drop down to just $59,000 per Bitcoin. So you can see here that the value of that spot Bitcoin would drop down to just 190 million, with a P&L loss of 132 million. So jumping over to the mining side of things, again, still with 15 exahash, still with the same monthly Bitcoin mined. So looking over a profitable amount of Bitcoin only being 109.89 Bitcoin each month. And that is because the cost of Bitcoin is still 36,254 CleanSpark. So with all that information to take into account, you're going to see that the months to break even on the loan is 49.74. And if you recall, I said that these miners have about 3 years life typically before they get replaced. So in this bearish case scenario, there would not be a break even for the loan amount at the end of this 3-year period. So that would actually still yield a total amount of profitable Bitcoin at 3,956. But again, at a price of Bitcoin at just 59,000, that's only going to give you a Bitcoin value of 233 million. So with a P&L loss at 89 million. So again, in this scenario, both the spot Bitcoin purchase as well as the miner investment both ended up yielding with a P&L loss. However, purchasing those miners still ended up with a lower amount of loss on the P&L compared to that spot Bitcoin. All right, and the last case I want to cover, this again is still a bearish case. In this scenario, we're going to be starting at $100,000 and we're going to be dropping the price of Bitcoin by 1% each month until the end of that 3-year period. So at the end of the 3-year period, you can see that I have the price of Bitcoin coming in at $69,641. You can see that the spot Bitcoin price is still at $100,000. You can see the total amount of spot Bitcoin purchase is $3,225. So at the end of this 3-year period, if you are just purchasing and holding that spot Bitcoin, the value of that Bitcoin is going to be $224,593,000. So your P&L is going to still come in at a loss at $97 million. Looking over on the mining side of things, you can see that the profit margin starts out at 63.75%, and then it slowly drops month over month. But in this case scenario, because the price of Bitcoin did not drastically drop immediately, there was still enough profit to be made in Bitcoin to be able to break even on that loan. And you can see that in this specific case scenario, the break even happens in January 2027. So it takes about 2 years to break even, leaving a full year of profitable Bitcoin to stack for some possible P&L. So let's take a look and see if that was the case. So you can see at the end of this 3-year period, again, after subtracting the cost of Bitcoin and then paying for that cost of Bitcoin, there is a delta of profitable Bitcoin each month. You can see I have it on this table. At the end of the 3-year period, the amount of Bitcoin HODL would be 5,801 for a total Bitcoin value at 404 million. So again, subtracting the $322 million loan, you can see that the P&L is still a profit. It's still a gain at 81,513,000. So again, even on this bearish case scenario where the price of Bitcoin was to drop by 1% month over month, you can see that mining Bitcoin still makes more sense than purchasing spot Bitcoin. Again, that's just my opinion based off of this information. All right, and that wraps it up for me. I hope you guys all enjoyed this video. If you did, please consider giving it a like. Let me know your thoughts. How do you think I did covering this? If you happen to know some of these calculations, some of these Bitcoin treasury values, or what the decrease of Bitcoin mined per exahash is month over month, or as these blocks are mined, let me know, drop a comment, and I would love to be able to kind of make some adjustments on some of these numbers. So with all that said, I hope you all have a great rest of the day, and I'll see you on the next one. Well, hello and welcome to another video by Financial Ernie. On today's video, I'd like to talk to you about CleanSpark Inc., the Bitcoin mining company's latest press release, as well as discuss their monthly mining metrics and talk about December's current monthly mining numbers, as well as the potential forecast for end of year. So without further ado, let's get right into it. All right, jumping into the press release, this one's dated December 23rd, 2024, and it has to do with CleanSpark Inc. meeting their end of year target in terms of hash rate of 37. They actually hit 37.5 as of this press release with an operating fleet efficiency of just 17.7 joules per terahash. That efficiency is very important because that affects the cost to mine each Bitcoin. So the lower that efficiency number goes, the less energy it will take to mine those Bitcoins. So pay attention to that. And of course, the hash rate has to do with the quantity of Bitcoin that they are able to mine. You know, that's all calculated based on the level of difficulty per block of Bitcoin mined. So jumping into the press release a little bit further, this was possible based on the company's newest data centers, both in Tennessee and Wyoming, becoming energized as of the week prior. And this is actually part of a 2-stage between site expansion and then ongoing fleet upgrades. So
With that, some of those older, maybe S19 miners are getting upgraded to the S21 Pro miners, as well as just that additional room, that rack space for their infrastructure, being able to just put in those new S21 Pro miners. So they're going to be getting both a hash rate increase as well as an efficiency decrease as those new miners do come online. So let's talk a little bit more about their growth. So as you may know, based on their press releases and as of their filings, they mentioned that for the calendar year 25, they had plans to reach 50 exahash per second. That was a modest target. And as of this press release, they are stating that this 50 exahash per second will be met by the first half of calendar year 25. So that is huge. One other thing I did want to mention is if you listen to a Mining Pod interview with Zach, he does mention that they are able to get all the way to 63 exahash per second if they are utilize their entire purchase agreement with bitmain. They do have a future sales purchase agreement where they can purchase some additional miners that they've already locked in. They have price guarantee for. So between their current infrastructure, their rack space, their potential of total kilowatts, or I should say megawatts of their infrastructure, they are able to get those additional immersion miners as well as some more of those S21 Pros all installed. And if they completely use that entire purchase agreement, they can get up to 63 exahash per second. So I will have my eyes on that by the end of the calendar year 25. That's just me speaking, but based off of, what's possible, their potential here, I think it's a rather doable goal, especially as the rate to mine each of these Bitcoins becomes more and more difficult. They're going to need that additional hash rate to stay competitive and to continue to reap that revenue amount per month. So jumping down a little bit further, let's read a quote from Zach. He says, "Our teams have been hard at work throughout the entirety of this past year. We have delivered on our ambitious targets and expanded our hash rate nearly 300% since the beginning of 2024. I'll pause right there. I'm going to be sharing a slide coming up that has to do with their month-over-month hash rate, as well as the amount of Bitcoin mined, Bitcoin hodl, and their efficiencies. So stick around for that. Jumping back into this quote, Zach says, achieving 37.5 exahash per second with a fleet efficiency of 17.7 joules per terahash is a significant milestone, as we intend to continue adding highly efficient hash rate throughout the end of the year and into 2025. So let me pause right there. He says throughout the end of the year. I have a feeling that by the end of December, they will be even higher than 37.5 exahash per second. I'm just reading between the lines on this quote, but I do feel that there is potential for that coming in. So one other thing I did want to jump into, and that is at the very bottom of this, I have it boxed in red. This is actually from the November Bitcoin mining update press release, but it is very important when you're looking at what CleanSpark has announced already. So if you did pay attention, they announced things for Tennessee and Wyoming. They did not talk about Clinton, Mississippi. So jumping down here, it says 2 Bitcoin mining sites near Clinton were delivered to CleanSpark turnkey ready and are energized as of December 2nd. Once completed with the installation, they will house their S21 Pro miners with an expected combined operating hash rate at 1 exahash per second. So again, it looked like they were very close to having that site operational and utilizing that hash rate with those S21 Pro miners. So if they are able to pull this off by the end of the month, they could actually be at 38.5 exahash per second. Don't know if they will, but just wanted to put that out there for you. And jumping back into this, this is additional quote. This has to do with that convertible bond. So with the closing of our $650 million zero coupon convertible bond offering, exceeding guidance and delivering our fleet efficiency goals, December has been one of CleanSpark's strongest strategic months to date. The capital raised is expected to be more to fully fund our expansion to 50 exahash. As a result, we are pleased to announce accelerated expected timing of 50 exahash for the first half of calendar year 25. And again, let's continue reading on. It says, this is the result of discipline and focus on our core operating business, Bitcoin mining. Our goal and efficiency have resulted in a Bitcoin treasury balance quickly approaching 10,000 Bitcoin, all of which we have mined. As we look toward 2025, we intend to remain focused on Bitcoin and mining efficiently, utilizing operational excellence at scale. So I do feel that they will continue to put those latest gen models of both the S21 Pro as well as that S21 immersion style miner into their fleet and on their racks to be able to drop that efficiency number down into the 15s, as well as increase that hash rate up to 50 plus. So I am looking forward to that. All right, jumping onto this slide, these are some of those monthly metrics that I mentioned. Starting at the top left, you can see the monthly Bitcoin mined as well as their HODL balance. And as you well should know, April was a month that the halving took place. So you can see that monthly Bitcoin mining getting dropped. And you can see they've been doing an excellent job of recouping that. Remember, they get half as much Bitcoin for that same hash rate amount after the halving. So I think that's huge, and that's why they've been doing such a great job of continuing to improve their fleet efficiencies, as well as expanding to get that additional hash rate online. Looking at the bottom left, this is their efficiency. You can see that it's been dropping month over month. Started out at over 25 joules per terahash, and it's already down to, as of that December highlight, it's down to 17 or so joules per terahash. And that is a huge accomplishment. If you look at some of the latest gen models, they do have capability to get down to 15 joules per terahash. So I do still see some additional efficiency gains for CleanSpark in the months to come. Jumping on the top right, you can see their fleet. So we talk about that hash rate growing month over month. That has to do with these additional miners they put in. Now, I want to make sure that I explain just increasing your mining fleet to get that hash rate is not just the most important thing to do. You have to make sure that you're balancing that with efficiency, because you want to make sure that your cost to mine Bitcoin continues to be reduced month over month, because it's going to become more and more difficult. It's going to take more and more of this hash rate in order to be able to mine those Bitcoin blocks. So again, it's a good balance between the mining efficiency as well as the number of miners, which will increase that hash rate. So jumping down to the bottom right, you can see CleanSpark's hash rate month over month. You can see they were just sitting at just 10 exahash per second in January of 24. And looking at the end of December, you can see based on this last update that they are already at 37.5 exahash per second. So that is huge. That is over 300%, as Zach said, of hash rate increase for CleanSpark in just this one calendar year. All right, and on this last slide, I want to talk about their December Bitcoin mine to date, and this is as of December 24th. You can find this information online. They do have a public wallet, so you can track this each day. Typically, it comes out early morning. You can see their Bitcoin mine for that day. So as of 24th, you can see that they've already mined a total of 448.72 Bitcoin with an average Bitcoin mine at 21.33. So if you take that average, multiply it by 31 days, which is the amount for the month of December, you can see that there is a forecast end of month to come out at 661.277. So that number is going to depend on if they continue running at that average hash rate. If they do end up dropping some of these miners offline to do some upgrades, it could drop down. Or if they actually install additional miners, increase that hash rate, it could go up. But this is just my best guess based off of the average amount of Bitcoin mined so far in the month of December. And at a Bitcoin price of 98,643, you can see that they have a forecast end of month of revenue from Bitcoin at 65,230,000. All right, and that wraps it up for me, folks. I hope you enjoyed this video on CleanSpark Inc.'s Bitcoin mining metrics month over month, as well as their press release talking about their latest in terms of their hash rates. If you did enjoy this video, please consider giving it a like. Subscribe to the channel if you haven't already. Make sure you turn notifications on so you get the latest updates from myself in terms of CleanSpark and other stock that I cover. And if you have any questions about this video, how do you think I did in covering this press release? Make sure you drop a comment. Let me know your thoughts. I'd love to hear them. I'd love to respond to those. And with all that said, hope you all have a great rest of the day, and I'll see you on the next one. Well, hello and welcome to another video by Financial Learning. On today's video, we're going to be looking at CleanSpark Inc.'s December mining numbers. That's right, the month is over, and according to their public wallet address, we can break down the entire month's mining numbers. Also, I'd like to take the opportunity to look over what I think could potentially be a profitable quarter. So without further ado, let's get right into it. All right, and we're just gonna be covering this one slide here, but pay attention because I'm gonna be going over a lot of details for the month of December and for what I believe could be a very profitable quarter for CleanSpark. So make sure you're paying attention. We're gonna start on the left-hand side. You can see the daily Bitcoin mine numbers. And if you see that green column, that is actually the revenue per day. And I'm using the final price of Bitcoin for the month end. That's right, on December 31st, the price of Bitcoin was $94,038. And that was the price at which they mined their last bit of Bitcoin and transferred that wallet. So looking at those numbers, you can see the sum of Bitcoin for the month of December was 665.887. And you can see that average at 21.48, almost 21.5 Bitcoin mined each day. And that is a rather impressive feat considering the level of difficulty on mining these blocks of Bitcoin becomes greater and greater, which is why there's such a rush to increase that hash rate. So CleanSpark will be aggressively getting towards that 50 exahash by the first half of 2025. Looking at the cost to mine, I'm still using the September ending amount that CleanSpark has provided. That includes the power cost as well as their Bitcoin depreciation, their miner depreciation amount, and an accelerated depreciation amount. So all in cost to mine that Bitcoin is $36,250. And if you take the total sum of 665.887 Bitcoin, multiply by that cost per Bitcoin, you're going to get the total cost to mine the entire month amount of Bitcoin at $24,138,000. So if you take the revenue amount, which I didn't cover yet, would be the end of month Bitcoin price times the quantity of Bitcoin, you're going to get $62,619,000. Subtract that from that total cost and you're going to get the monthly profit amount. I have the monthly profit amount coming in at $38,480,000. Of course, this number is going to change slightly based off of what the true cost to mine the Bitcoin is. CleanSpark will have to disclose that to the investors on this next quarterly earnings statement. Moving over to the middle section, you can see I have actually a snippet of what that wallet information looks like. That's what I use to come up with these calculations. And at the bottom, you can see both the October as well as November Bitcoin mining numbers. Starting with the October numbers, you can see 655 Bitcoin, and then the November number coming in at 622 Bitcoin. And remember, the month of November has one less day than October as well as December, but adding up all 3 months, you're going to get a total Bitcoin for the quarter ending in December at 1,942. Remember, when it comes to revenue, we're going to use the final price of Bitcoin for the quarter, which is going to be December 31st, which I've already disclosed. That was that $94,038 per Bitcoin. And you're going to get a total revenue amount of $182,622,000. If you subtract the cost of my Bitcoin, again, $36,250 per Bitcoin, times the total number of Bitcoin mined in the in the quarter of December ending, you're going to get a profit amount of $112,225,000. Now, I didn't want to stop there. I did have one of the viewers reach out and say, don't forget about some of those other expense line items like payroll, professional fees, as well as G&A. I went ahead and added those as well. I looked at some of their financial filings and I took a average of the last quarter and I went ahead and applied it here. Again, this number could change as they may have taken on more headcount with some of the expansion, but for now, this is what I'm using for my reasonable estimate. Again, this number does not include any one-time type of depreciation or impairments. But you can see here I have a total other expense line of $29,521,000 and change. So take that profit of $112,225,000 and subtract that $29,521,000, and you're going to get an estimated net profit excluding the impairments at $82,703,000. So I do truly believe that CleanSpark has the opportunity to come out profitable for the quarter ending in December. It's really going to be close and going to depend on that cost to mine Bitcoin. Did it continue to go down as they did improve their efficiencies month over month, and as this price of Bitcoin did continue to increase? And again, it's really going to depend on that payroll amount as well as some of these other expenses, and then that impairment amount. The impairment amount is going to be huge. That is really going to sway whether or not it is going to be a green or a red quarter. All right, and for the month of January, I went ahead and made a potential forecasted amount. This is just a guess by me, and this is based off of that exahash rate continue to increase. Now that they are at 37.5 and they're continuing to add, I think keeping a consistent 22 Bitcoin per day is definitely achievable for CleanSpark. So based off of that, I think they could end the month of January with a new total of 682 Bitcoin for the month of January. So we'll have to stay tuned and pay attention to that wallet ID to see what kind of numbers they're able to get out. All right, and that about wraps up for me. I hope you enjoyed this video. If you did, consider giving this video a like. Subscribe to the channel if you haven't already. Drop a comment. Let me know your thoughts about how I did uncovering CleanSpark's December mining numbers, as well as my best stab at their December ending quarter results. And also that January estimate. Do you think I'm a little bit too generous or a little too stingy on their amount of Bitcoin mined per day? I think they may actually be able to do 22.5, but I don't want to overshoot the moon here. And with all that said, I hope you all have a great rest of your day, and I'll see you on the next one.